Hi, this is James Shoke with Westpac London's end of day report for Tuesday the 9th of April. Well, it was a bit of a so-so day on the economic data front today, nothing particularly exciting. We had in the US slippage in the Small Business Optimism Survey from the National Federation of Independent Businesses. It fell from 90.8 to 89.5 in March. That's a similar fall to what we saw in March last year, and indeed the year before that as well we saw a fall after early year strength excuse me, in that index. The issue seems to be yet again seasonal adjustment related distortions rather than perhaps underlying shifts in economic activity. Although it's worth noting that the intention to hire index fell to its lowest in a year in that survey, and small business is one of the biggest hirers, or is the biggest hirer, I should say, in the US economy. So to the extent that that actually reflects underlying opinion, if it does, it's not just a seasonal thing, it is perhaps a bit of a concern for the labour market. There's some US data, Canadian data on the housing sector, building permits and housing starts, confirming the softness that's emerging in that sector in that country. German exports were down 1.5% in February. That reversed their January rise, and also their annual pace of contraction, -0.3%. It was the first contraction since the recessionary year of 2009. So a weaker export story clearly emerging in Germany. That's been pretty much the major source of growth in the European economy when it has grown. And that's not even happening now, it seems. In the UK, we saw a jump in industrial production in February. That was more or less related to snow disruption in January, and we saw a bounce back there. We're going to see similar volatility probably in the March and April figures, given the very cold weather that we've had, unseasonably cold, which has meant that utility output will be a big driver of again, I suspect, in the March data in a month's time. But if you look at the annual pace, both for overall industrial activity down almost 3% over the year, and the factory sector down 1.5% over the past year, they're still recessionary readings, and that's consistent with the mostly sub-50 readings on the factory PMI for the UK over, well, nearly the past year, with the exception of December and January, where it briefly, temporarily, rose back above 50. Related to that, we had export figures for the second month running. Exports were down in the UK. They're down a cumulative almost 5% since the end of 2012. And most of that's actually due to exports to areas outside of Europe. So it's not European weakness driving the recent slump in UK exports, it's exports elsewhere. And there was some other survey data out of the UK which showed a little bit of optimism, or less pessimism at least, on house prices, and a reasonably robust retail sales report from the British Retail Consortium. That's it in terms of the economic news this part of the world. We had softer Chinese inflation figures, which came out in the Asian session. They were a driver of early gains in European equities on the basis that the Chinese authorities might be less inclined to put in place slowing measures given those inflation figures. And we also had the Alcoa result, the first of the quarterly earnings season numbers out of the US. They beat analyst expectations on earnings but missed expectations for revenue, so it was kind of mixed. And in fact, I think the average of analysts' expectations for the earnings side of things, for the first time since 2009, are actually looking for a decline in earnings when you take an average of all the analysts' views on all the major companies that are reporting. So, to the markets. A modestly positive day today. We've had in the London market up 0.6%, Rio and BHP, strong performance today. The commodity prices are higher too, so there's been a bit of a commodity story underpinning the gains there. The French market up just 0.1%, the Germans down 1/3%, but Spain and Italy posted gains in excess of 1% today. And at just going up to 6 o'clock in London, the Dow in the US is up 0.25% at 14,646. As I mentioned, commodities are doing okay, with oil up 0.8% at $94.10 a barrel. Gold's up more than 1% at $1,589 an ounce, and copper's up 2.3% today. The Aussie dollar, it's at 1.049 against the US dollar. Almost hit 1.05 today, but didn't quite make it. So pretty much back at the highs we saw last week. The low point yesterday was about 1.035, so around a 1.5% gain in the Aussie dollar over the last day or so. In Australia, we've got consumer sentiment coming out Wednesday. That's the Westpac Melbourne Institute survey, just taken over the past weekend. That index has shown some decent gains in the last couple of months, so it'll be interesting to see if they can be sustained. Okay, that's it from me for today. I'll be back again tomorrow.